everyone, thanks for joining and welcome back to my channel. My name is Wahidah, your investing coach. This is where we will really break down how to build wealth through investing, even if you're the first one in your family to do so. Okay, so what is investing? You may have heard people say you should be investing. It's really important to be investing, but what does this really mean? Usually when people are talking about investing, what they're talking about is investing in the stock market. The stock market is essentially a place where you can buy and sell bonds. So it's a constellation of exchanges, right? So if one person is trying to buy a stock, another person is selling that stock. But let's break that down even further. What is a stock? So a stock is a piece of a company. So think of a company as a pie, like blueberry pie, apple pie, whatever. So you have this pie, and you are going to buy one stock in this company, in this pie. So essentially what you're doing when you buy one stock in a company, you're buying one tiny piece, one tiny crumb essentially of that pie. So, but you own it, right? You now own that piece of crumb and you own that small piece of that company. So as that company increases in value and it grows, so does that stock that you own within that company. It grows with it. You might be asking, like, why would a company want to sell their stock then? There's a lot of reasons, but mainly it's so they can raise cash, so they can operate the company in any way they see fit. Okay, so we said that the stock market consists of stocks and bonds. So what are bonds? Bonds are essentially a loan. It's a loan a company or a government takes out, and you are the lender. You're the bank. So in exchange of lending money, there's an agreement that you'll be paid back at a certain interest rate. So essentially think about how, if you have bought a home or taken out a loan yourself, how you had to pay back that loan, and each month you paid a little bit extra, right? So it's similar, but like switched, and you're essentially the lender. So now that we know what stocks and bonds are, why should we invest in them? Well, let's look at the numbers, right? So over the last 30 years, the S&P 500 has had an average return of 9.88%. What does this mean? So the S&P 500 refers to the largest 500 companies in the US at any given time. So it's essentially just a tracker. The S&P 500 index is essentially just tracking what the 500 largest companies in the US is at any given time. So these are companies like Amazon, Apple, Facebook, Google, very large companies. The S&P 500 is commonly used as an indicator to see how the economy is doing and how the stock market is doing. So having this, so knowing that if you invested over the last 30 years, you would have had an average interest rate of 9.88%. Is really nice, right? Because we're not giving more of our time for money. This is passive investments. So this is really where we can start building wealth in our sleep. And this is why investing is so important. But yeah, let's take a look at the numbers and what an investment of $500 per month would be in 30 years. So here you'll see the compound interest calculator from investor.gov. Just going through this, we're looking at initial investment. We're going to start at zero. Our monthly contributions, we'll put $500 per month for the next 30 years. And then we're going to estimate an interest rate of 8%. And I know the S&P 500, like I mentioned, has had an average interest rate of 9.88% over the last 30 years. But we can't really guarantee that it's gonna keep happening like that. And also, we don't know, if we're gonna have a diversified portfolio, like what we're investing in. A lot of the times that will include bonds as well, and bonds are considered a little bit safer investments. So the interest rates aren't as high as what it could be over the long term with, again, like the S&P, if you invested in the S&P 500, right? But to have a solid portfolio, to have like not putting all your eggs in one basket, right? It can be smart to invest in certain things at different interest rates, depending on really when you're needing that cash, when you're needing that money, essentially for retirement. Okay, so if we're putting in $500 per month for the next 30 years, and we're going to estimate an 8% interest rate, we're going to have, in 30 years, $679,699. So that's a lot of money. And let's break this down even further. Look at this graph. You'll see in the green line that the green line will be your total contributions. So over the 30 years, if you put $500 in it every month, you would have put in $180,000 into the investment. And then if you look at the red line, that's showing you your future value, what you would get in the next 30 years if you invested them at 8% interest rate. So if you invested it, it would be $679,699. So that's quite a big growth, right? So, and you can see that gap here. That's passive income. That's passive growth. So this is why we invest, because we're able to now make money. We're able to grow our wealth without having to trade hours for a paycheck, hours for a dollar amount, right? This is how we're gonna make money while we sleep. Okay, so that is it for today. Come back every week for new and exciting videos. Thanks for joining me today. Bye, y'all.